Talking about deal making in general, we hear from a lot of PE guys that deal making is very difficult. Do you kind of agree with that?
Deal making has become a challenge for well publicized, highly marketed deals because, as you know, there is more capital chasing good companies than the reverse. And so, when you find a good company that meets all the investment criteria coming to the market, then there is a flood of interest. And then what happens there is valuations get ratcheted up. And what we have chosen to do in those scenarios is really be very disciplined because ultimately the math on private equity investing is the difference between what you entered at and what you exited at. If you enter even a good company at a very high valuation, then that good company has to perform out of its mind. It has to really hit 9 out of 10 to get an acceptable return for you. So yes, do we all get attracted and tempted by these high-profile transactions? We do, but we're paid to make money, and it's probably easier to find a smaller company that's not so sexy at a reasonable valuation. Then what that company needs to do to make money for you isn't so outlandish as what the best company needs to do. So that's our view at NSR in terms of how we are dealing with this overheated thing we're going out and trying to build our own deals. We're trying to build our own companies, create our own platform plays, and thereby try to acquire businesses, invest in businesses at reasonable valuations with plausible exit scenarios.
Platform plays. Can you just tell us a little more about that? What do you mean to do with that?
Well, a platform play is an attempt in a very fragmented subscale sector to find a way to create scale, size, and be able to bring in those elements that typically are missing and that have resulted in these companies remaining very small. So what are they? The ability to build a good marketing engine, the ability to make investments, the ability to create some common services that they can't invest in themselves, but so for example, if you take restaurants, which is an area of interest for us and where we are looking at creating a platform play. A good restaurant company should have a full-time real estate person because that's a big part of cost, right? But to get a good real estate guy purely for one restaurant, small restaurant group is almost impossible. But if you could add 3-4 different small restaurant plays, say 20, 30 doors, put them together, you suddenly are at a 100 door size. And you can then afford to invest in say a real estate guy, or if you need a health and hygiene guy, an expert that looks at hygiene standards across the food chain, or you want to get a good supply chain guy, you can, by aggregating these companies into a platform, be able to invest in a better quality of talent and better systems, processes, all this, which that company by itself, when it's very small, can't. So that's the idea behind a platform play.
Yeah, we are already seeing some of these kind of deals like with Everstone, forming consortium with some investors and basically forming its own NBFC, Indostar, and some such stuff. Are you telling me that you're basically looking at perhaps building assets?
That's correct. So where we found that, valuations are very high and difficult to justify, we've gone out and created our own entities. So for example, the one that we did early on was in the financial services space. We came in, it was an area of focus. We couldn't find any company at a reasonable valuation because they were all at very high valuations. And so what we did there was we decided, okay, let's buy a defunct company that had all the licenses. We found a management team that wanted to come in. We put in the capital and we put the three together. And today, Testimony is about to look for another round of capital, and there's a great deal of interest. So that we've established that we can do it, and now we're looking at doing it in 2 or 3 other sectors.
Interesting. You also invested in Cafe Coffee Day, which is kind of touted as a high-profile deal, and everyone knows about Vici Siddhartha, anyways. And he is kind of famous for his negotiation skills with the investors. In terms of how is the investment coming along in terms of expansion plans, and if you could just give us some more insight into that.
Well, I think the reason why Siddharth has always been able to command the valuations that he has is because he's one of the few guys who've demonstrated that he's understood what it takes to scale a business. And if you look at the restaurant business, which is in a very challenging consumer services, retail kind of play with real estate issues, people issues, supply chain issues, he's one of the few guys who's shown that, yeah, I understand what it takes to build more than 1, 2, 3, but to do 20, 30, 40. So when you have that confidence, then you are prepared to say that, okay, we can see the path that this company is going to take, and therefore it's not a shot in the dark. So yes, our valuations always challenging in Siddharth's companies. They are. We've done something innovative about that valuation issue, which I unfortunately can't share with you. But he is 4 times the size of its next nearest competitor. He is twice the size of the entire coffee sector, okay, all combined. And he's continuing to add 150 to 200 doors a year. So we think, in that context, the valuation isn't an aggressive one. So we remain very optimistic that this is going to turn out to be a very good investment.
I had a kind of stint with media also. You invested in INX Media, which did not quite turn out the way you perhaps imagined to be. So what exactly went wrong? Was it the choice of the promoter? Was it like, perhaps media was kind of overheated, execution went wrong? And what are you doing to, perhaps take some measures to resurrect the company now?
Yeah, I cannot deny that INX Media, as the company was called at that time, started with a lot of hope, started with a very marquee set of investors, and backed a team that had enjoyed a huge deal of success in their previous companies. But I think the learning we had coming out of that experience has been that, at the end of the day, even if you put all the blocks in place, success is not guaranteed. So I don't want to go into what lessons we learned. We learned a lot of lessons out of that. We still continue to believe that media is an interesting space. And so what's happened after INX actually kind of folded was we were the only investors who continued to believe that media had an opportunity. So we picked the one channel that we felt was differentiated enough, which was 9XM, and we have bought out the other investors, and we are now running that company. We now own that company. We brought in a very experienced media professional, Pradeep Guha, who has a lot of prior experience with Times Group and Z, and he's come in, he's put in some of his own money into that transaction. And we are very encouraged by what 9XM is doing. It is already neck to neck with MTV. It's ahead on several segments, consumer segments. It has a very unique format, which we are now going to replicate in 2-3 new ideas. And it is perhaps the only TV channel that is profitable both at the EBITDA level and at the PAT level. Okay, so it's a nice small niche business that's growing very nicely. We've got lots of ideas on what to do next with it. So we believe our original thesis about the opportunity remains true even today, and we are continuing to prove that we will back that idea, and we are now showing results.
You also had an investment in an infrastructure company called Astra.
We have a company called, it used to be known as Astra Infrastructure, now it's known as Ascend. We've renamed it Ascend. Ascend is the only tower company that is profitable, again, at the EBITDA level and at the PAT level. Now, I know it sounds old-fashioned in private equity investing to say companies should be profitable, but at the end of the day, that's what everybody hopes for. It's a small company with the best-in-class tenancy, which is one of the metrics for revenue in terms of how many tenants you have per tower. We don't build any towers on a speculative basis, and we are in the process of actually merging the ILFS TVS Capital company into ours, which we will then operate and manage and run. Okay, they will become co-investors, but we will take over the operations and management, because if you look at the metrics of the two companies, they are much larger in terms of number of towers. We are actually much better in terms of operating metrics. So the fact that NSR actually has a lot of people who have long years in operating experience. Okay, so people like me, my colleagues, we are new to private equity, but we've run businesses, built businesses, and we're beginning to show that in Destimony, in 9XM, in Ascend, that at the end of the day, after the money has gone in, to get money back, it is all about running a good ship, and I think we know how to do that better than a lot of other companies.
So are we seeing NSR kind of transitioning from a very minority growth capital investing to very hands-on operational kind of asset management firm? Can we say that over the years? Is it a sign of the franchise being maturing or evolving in keeping with the PE scene in the country?
Well, I don't think we are prepared to say that we have given up all minority growth capital investing. We have not. And we continue to look at transactions that are more opportunistic and where there is a good management team and a good company. We'd still continue to look at those transactions. But yes, we are beginning to believe that given that a 5-year window is the time that typically a PE has, a 5, 6, 7-year window at the most, and you need to literally treble the company's growth for PE to make those kind of returns, that in many cases promoters have much longer time frames. Two, promoters find bringing in talent, external talent, all that much harder. Even though they know they've got to do it, they're worried about what will I do with my relatives, what will I do with my existing guys. And as you heard today, there are clear differences that happen when you go from 0 to 10 crores, 10 to 100 crores, 100 to 1,000 crores. These are almost like different lifetimes. And so even companies who grow find it very hard to change their operating styles when they transition. So one option is, yes, continue to push the promoter, continue to persuade him that you should do this, you should do that, which we continue to do in all of our companies. We are very active, hands-on investors. But at the end of the day, it's always the promoter's calls. There are some promoters who understand it and are more proactive. There are other promoters who have good companies but are reluctant to make what we think are the changes they should make. And so we find that, as I said originally, in overheated sectors or attractive sectors that lack scale, where our minimum investment size cannot find a sizable company to invest in, that it's probably better for us to be able to go in and build our own companies, invest in them. Then we can set the standards, governance, people, payroll, all the issues that we can define. And having done it successfully in one, then doing it again in 9X and showing that it's successful, we have a lot more confidence that that is probably a better route. But having said that, we have done even this year minority investments and will continue to do that.
Interesting. What's happening with Reliance Infratel? Considering Reliance Communication, we keep hearing stuff about that. So any thoughts there?
Well, Reliance is a company in which we have a very small stake. It's a point something stake. The company has very good assets. The company has very good operating metrics. What it has is an issue at the corporate level and in terms of funding. The debt overhang is really not on Reliance Infratel. It is on the telco. What will happen out of that, we are not sure at this time. But as far as our investee company, Reliance Infratel, it has hard assets on the ground. it has tenants, it has optical fiber backhaul. So it is an asset-backed business as opposed to, let's say, the other elements of the telecom business where, customers, it's a variable kind of business. So we're still hopeful that, we will get a good exit from them. There's nothing that tells us otherwise.
Okay, last question in terms of, we're seeing a lot of instability in the private equity environment. We see private equity professionals branching out and perhaps forming their own funds. In this kind of environment where, LPs are increasingly getting concerned about the reputation of Indian PE fund managers, and when NSR really came, it came with a backing of really high-profile blue-chip fund managers. And with what we're hearing in the news about Rajat Gupta and all these things, does that in any way translate into any kind of bad word being spread around, or perhaps in your dealings with your LPs?
Well, in terms of our LPs were very clear that Rajat was the chairman of the fund, and as far as the day-to-day analysis of companies, day-to-day workings with companies, the people who sit on the boards of companies, they are all the people in the Indian advisory firm. Okay, so Rajat, for example, doesn't sit on any boards of any of our companies, never had. So I think they recognize that as far as the working part of NSR, life goes on, there's no difference. We continue to look at transactions, make deals, build great companies. So our LPs get that, they understand it. Are we all sad by what Rajat is being accused of? Of course we are. I think all Indians who looked up to Rajat as somebody who achieved phenomenal success would hope that when the court actually takes up his case, he will be cleared. Right now he has only been tried. He has never spoken his side of the case under advice from his lawyers. So I'm hopeful that, when all the facts are out, Rajat will clear himself, not just from an NSR perspective, but just because he is a wonderful guy, he's a very successful Indian, and he's a role model for many Indians. So I'm hopeful that. Has it affected NSR on the LP side? As I said earlier, no. Has it affected us in our portfolio companies? No. Has it affected us in terms of prospective companies? There was a recent article that speculated that a particular transaction that we were involved in was that we were not selected for that investment because of the Rajat Gupta and reputational risk issues. And I just want to use this platform to really make it clear that that is absolutely untrue. The company had a certain ask in terms of valuation. The NSR investment committee did not agree with the deal team's recommendation. We think that's a great company. It is a great company, but we don't think it is anywhere close to the valuation expectations they had. Let me give you some information. It is about 1/100th the size of L&T. It wanted the same valuation as L&T. Okay, so we looked at it and we didn't feel that it merited that. We put in a much lower bid. There were other funds who felt they merited L&T's valuations. They've got the transaction. Unfortunately, the media reported it as NSR was thrown out for reputational reasons. We are disappointed that the promoters who it ascribed its source to didn't come out and clarify that fact. But that is the fact, and I do want to go on record and say that.